Hello everyone, and welcome back to another tax talk. In this video, we're diving into the topic of T4 tax slips. As discussed in previous video of salary versus dividend, if you decide to take the money out of your company in the form of salary, then the company has to follow some administrative steps. Now, once the decision is made to pay a salary, your corporation will first need to register for a payroll account with the CRA. And each time the corporation pays salary, it will have to reduce your salary by some amounts, like Canada Pension Plan, taxes, employment insurance, and pay these amounts forward to CRA on a regular basis. Check out my video on CPP and employment insurance for more details. If your corporation is late to pay these amounts to CRA, then there are penalties, so make sure you have a good system in place to track and pay these amounts to CRA on time. Whether you are hiring an employee or paying yourself a salary from your company, this process is the same. Let's go over it step by step. Firstly, you will need an employment agreement. This agreement between the company and employee outlines employment details, such as the compensation. There are many free employment agreement templates online that you can use, or you can quickly build one through a paid service such as legalcontracts.ca. Next, you will need personal details of employee like federal and provincial TD1 forms, filled out and signed, mailing address, social insurance number, date of birth, bank account information, contact information such as phone number, email, etc. Once you have the agreement in place and the employee information, you need to choose the method of payroll, that is whether you would like to maintain payroll system through a software or do it manually using a ledger and checks or e-transfers. If there are many employees, then payroll software would be a good choice to avoid errors, as there are heavy penalties if error happens. Next, you need to decide on payroll frequency, that is, how often the employee will be paid. The two most common frequencies for payroll are bi-weekly payments to employee, that is every 2 weeks, or semi-monthly payments to employee, which is twice per month. Then, register your business for payroll account with CRA. You can either do it online or call CRA to register for payroll. Now that all is set up and registered, it's time to do the payroll calculation to pay the employee. Remember, as an employer, the company is responsible to deduct CPP, employment insurance, and income tax from employee's paycheck and pay it to CRA at regular intervals to avoid penalties. As we discussed in another video about CPP, that is Canada Pension Plan, there are two parts to CPP. One portion is deducted from employee salary and contributed to Canada Pension Plan account, and another portion is employer contribution to Canada Pension Plan account. So you need to make sure you capture company portion and employee portion of CPP and pay it to CRA. Next is employment insurance. Just like with CPP, for employment insurance also, there is an employee portion, which is deducted from the employee's pay, and there is an employer portion that must be paid by the business. Next deduction from salary is income tax. It should also be deducted from each paycheck and given to CRA. So when does the company need to submit these payments to CRA? The due date would be the 15th of the following month. For example, January deductions would be due on or before February 15th. Next, you can calculate the payroll after these deductions. If you have a payroll software, it will do it for you, but if you are doing manual payroll, then you can use CRA Online Payroll Calculator. Let's go over a simple example to understand better. Let's say your salary is $3,500 for this pay period. Your company will deduct $191 of CPP, $55 of employment insurance, and $665 of income tax. And you will receive net pay of $2,589 in your salary check. Your company will need to pay the deducted amounts to CRA on or before 15th. Your company will also need to add in an employer portion of CPP, that is, additional $191, an employer portion of additional employment insurance, and pay it forward to CRA. Employer CPP portion should be equal to CPP of employee portion. However, employer employment insurance is 1.4 times the employee's contribution. Then lastly, just like you file your tax return each year, the corporation has to file T4 tax slip each year, For salaries paid to employees. This T4 slip summarizes the yearly salary paid, yearly CPP, yearly employment insurance contribution, yearly tax payment, and any other payment made to employee, like bonus, allowance, etc. These amounts will be reflected on this T4 slip form. This is how the form looks like. Payroll software does it for you, or you can use an accounting tax software to run it once a year. However, make sure you have a tracking Excel to track yearly payments and deductions, as the total for the year will need to be inputted in CRA Online Payroll to calculate it for you. The company is responsible to provide this T4 tax slip to their employees each year, so that the employees can use the slips to prepare their income tax returns. Hope you have a better understanding of what T4 slip is and how it works. That's all for this video. If you have any questions, comments, or would like me to explain any other tax topic in detail, please feel free to drop a comment below. If you found this video helpful, please give it a like, hit that subscribe button, and share it with your friends who could really use some help. Good luck. Bye for now.